Because like I said, nothing's been formed. It's just a seed has been planted in my head. And
what do you think Brandon should do?
So I'm in a pretty interesting predicament right now.
You are.
I would say so.
Yeah.
And it kind of spurred the topic of today's video, which is on the realm of stocks versus ETFs.
Yeah.
Like one of the most common questions that people have. I see, when people are building or sharing their portfolio, there's many different strategies and approaches.
And some pretty strong opinions.
And
on both.
very strong opinions.
Yeah.
I wanted to kick things off with a question for you, Dad.
Yeah.
Throughout your lifetime as an investor,
Yeah.
have you ever considered switching your portfolio strategy, like your approach, when it comes to the holdings over the years?
Yeah. Well, short answer is, have I ever considered it? Yeah, I've done it. And I think back to when I began investing, so a long time ago now. But my first investment ever was a RBC, a Royal Bank balanced mutual fund. Like so many people, I started in mutual funds. And keep in mind, that was, I don't know how many years ago, eons ago. And so mutual funds were the thing. And this, there were very few ETFs compared to what we have today. So I started with mutual funds. And I started with that balanced approach, which now I don't like balanced funds, but I did, at the time I didn't know any different. Then I never really switched over to ETFs, but when I became an investment advisor, so when I became educated and got up to speed on the industry, I migrated that over to a portfolio of stocks, which to this day, I've owned individual stocks for my equity portion of my portfolio up until very recent. I mean, we'll talk about this in a little bit here. I've actually added a couple of ETFs for the reasons we can discuss. But yeah, that's been my evolution. But you're right. A lot of people, the decision is either if you own stocks, should you use ETFs? Or if you own ETFs, should you own stocks? So yeah.
I've seen both ways. And I've seen, people like... just sharing amongst the internet, sometimes they either get fed up with one solution and go to the other. Yeah. Mm-hmm. They have a realization they should be doing something else. And I guess that's what I want to talk about. I mean, I have some interesting questions as well, Dad, to hear your opinion on.
Yeah. Basically,
sitting down, someone's a new investor or a current investor, what is the right approach for you?
Right.
And I did think something we should start off with is high level. What are the pros of, let's call it individual stock investing?
Sure.
What are the pros of ETF investing?
Yep.
We can just maybe spitball a few that you think.
Well, the reason, I'll just start with the way I look at things right now is I still own a portfolio of individual securities, and there's a few different reasons, but one of them is I just like the control of that, right? And for example, there may be certain companies I don't want to own.
That you don't have a choice if you go via the ETF.
If you go with let's say you pick an S&P 500 or a TSX, you get the package. The pros to that, we can talk about that. But as far as there's certain companies I just don't want to own. I don't want to have certainly 5 or 10 or 8% of my portfolio in that. No choice that way. Maybe there's companies, I don't know if we're going to specifically talk about this brand, but the ability to trim positions. And that's how I manage my portfolio. I'll either add to a position or trim a position if it's getting overweighted. You can't do that if you own an ETF.
Well, that's one that I would echo as well. For context, myself, people on the channel have heard it a long time. I followed a very similar evolution to you.
Yeah.
I did go that mutual fund to ETF route, again, being maybe a bit more modern. And now my portfolio is almost entirely individual stocks.
Right.
One of the things that I think of a recent example is I needed to pull some money. I think it was for taxes, whatever the case was. I needed to pull some money out of my account.
Yeah.
Well, I was able to just hone in on my meta position, which had done, quite well. I think it was up 100%. One of the ones that did well on, got lucky on. I had a very, it was very easy for me to say, well, I want to trim from this winner or take profits here, rather than essentially, let's assume you had an all-in-one portfolio. Many people will go just the XEQT route, right?
Yeah.
One fund. Then you essentially are selling portions of that fund regardless of how it's doing. You do have more control. I'm just kind of echoing your point there.
Yeah, and your example there, you may be selling something, part of the package that you don't want to sell because maybe it's going through a rough patch. And you otherwise.
And to be clear, I don't think we're advocating. We're not trying to convince you one way or the other. Our goal here is to look at the options. Good point. We'll see when we get to ETF and everything.
Good point. Another point, very briefly, and this is a controversial one, no doubt, but you have the opportunity to outperform the markets if you're managing the portfolio separately. And I'm just going to spend a second on that topic because you also obviously have the opportunity to underperform. And in fact, there's all the studies that show that actively managed portfolios typically will underperform an index. So that's a tough one. It depends on a lot of different factors. And I wouldn't really... that's not the reason that I would have individual securities, but it's one of the factors that...
that's one thing that I think a lot of people may may miss, like, they may get it wrong. When they see someone holding individual stocks, it's automatically assumed that you think you're smarter than the market.
Yeah, and it's not the case.
Oh, you think you're going to outperform the market. Again, in many cases, some people are trying to, but I mean, at least speaking for myself, that's not even the case. I've said on multiple occasions, like, I'm happy with a market return, accepting the fact that, hey, maybe it does come in below market return. There are many other factors, which I think we have a list here to go through, but it's not, I think, always the case where if you have individual stocks, you think you're smarter than the market.
For many, many years, for interest sake only, at the end of the year, I'll compare my portfolio returns to a market, whether it's TSX, NASDAQ, S&P 500. But it's irrelevant to me because I've invested my portfolio. I've constructed it for my needs, not for a market need. So to me, it's kind of a moot point in any event. But you do hear that a lot. Also, things like tax loss harvesting at the end of the year, very possibly. It doesn't have to be the end of the year, but that's usually when it's done. You might look for, okay, I've triggered a capital gain here. Where can I make adjustments there?
More on that flexibility control, I would categorize under.
There. A couple other sort of things that aren't necessarily key, but you can own businesses that you want to support, right? And
directly.
A lot of people, when you're starting to invest, people say like, oh, what companies do you like? Your first stocks ever, I think, are Coke and McDonald's, right?
Yeah.
Way back in the day, when
big supporter of those businesses.
Yeah, we were back in the big supporter, maybe still today. And so, you can do that where you can't with an ETF, right? You just don't have any control. So
it's. Again, you do still have indirect exposure to them, but it does feel slightly different. Maybe just from a psychological level. When you say I'm a shareholder directly in such and such a company.
I had a client who was a shareholder of Manchester United.
Oh, cool.
Loved the team, and it was an incredibly small portion of his portfolio, but he just wanted to be a Man U owner. So
so there's that element of it. I wouldn't say that's a priority by any means, but maybe a very, very secondary factor. I think the most one maybe to knock off here is actually that. I think it's fun to own a portfolio of individual stocks.
Sure.
And I think to myself, maybe I'm getting ahead for the structure of this video, but one of the big reasons that I opted to go the individual stock route is I genuinely enjoyed it. It was fun, and I thought an ETF portfolio would be boring. And if I'm thinking to myself, this is something I want to do, for the next number of decades in my life.
Yeah.
It's enjoyable and fun to own a portfolio of individual stocks. Now, again, does that come at the cost of, let's say, underperforming the market? That's for you to decide. But for certain people, I think there's a heavier weight to that. I enjoyed owning individual stocks. I say enjoyed. I still own individual stocks, but
no question. Now, there are pros to earning ETFs. And this is sort of, I think what we're talking about here in this video is this potential migration over to ETFs. So, I mean, the most obvious thing that comes to me is just the ease of management, the convenience. You're just, you put your money into whatever the ticker is and everything else happens behind the scene, right? That's a no-brainer, really.
I think one that's maybe less apparent now, but it's like the diversification that an ETF would provide. The reason I say less apparent now is like when I started investing, with you, working with you, Dad, there wasn't fractional shares. There weren't CDRs. There weren't these options to buy, essentially these lower ticket prices. And if you wanted to get exposure to Nvidia or Google or Amazon, they literally traded $1,000 for many people who are young and starting out, or not necessarily young, but smaller portfolio values.
Yeah.
How can you build a diverse portfolio when you have $1,000 to start off?
You can't,
or even $10,000 for that matter. Very, very difficult. A lot of costs. Even like when we started, there wasn't simple. There wasn't these commission-free trading things. So each of those purchases you bought, you'd be getting hit with commissions. So the diversification route is obviously a huge positive of an ETF.
If I had to say the two main advantages, ease of management and diversification, no question diversification is to me, it's the more important.
For sure.
Because you can't diversify properly with a smaller amount, which is a situation a lot of younger people or people who maybe committed some money have never invested find themselves into. Another key benefit to ETFs, and I've actually just recently started employing this on my own portfolio, but is access to specialized markets or specialized strategies. And, there may be niches that you're not going to go out and build a portfolio, but you want to have access to. Mm-hmm. Some of the more aggressive or more volatile sectors, I guess is the correct term, you don't want to own one company in that sector. You might want to own the basket. Well, to go out and build it yourself, even with a larger portfolio, is challenging. But you can use an ETF that maybe like a Latin America, for example. Geographical might be an example. Or recently, I've added two covered call ETFs, one on the bonds and one on the equities, and that's just because I feel like when I was managing portfolios, I did covered calls. It's a lot of work. It is a lot of work. It's more work than I want to bite off right now. And so I kind of farmed that out to outsource that, exactly. So that's another area that these specialized markets or strategies that you might want to use ETFs for.
That's a good one. That's a good one, because I mean, in your case, you're giving the example of it's not necessarily an entire ETF portfolio, but for a portion of your portfolio, using ETFs for something.
Correct.
I think a couple more points are benefits to ETFs, and again, I hope this is like beneficial for you guys to lay out the land, I guess, if you will. I want to say, like, is this the right term? The highest likelihood for returns, or the highest like guarantee for returns? We never use the word guarantee,
right?
But what I'm saying is that you are essentially guaranteed a market return.
Oh,
and not saying the market you're guaranteeing a return, but you're guaranteed to track and partake in.
If you own QQQ, you're going to get the Nasdaq return, right? Yeah, whether that's positive or negative, you can pretty much less the small management fee, you're going to get the return, right? So yeah, that's true.
And then again, I think nowadays, I mean, you just think of how many options there are too. It's not limited in terms of, like, if you want to build a portfolio in such and such a way, whether it's the NASDAQ, whether you want an income product on the NASDAQ, or you want to yield, like, there are a million options out there. And it seems like that just continues to grow. So you're not, like, limited by options.
Double-edged sword. Way back in the day, ETFs were quite limited, and they were all index ETFs. So you bought the S&P 500 or you bought the TSX. Now there's so many choices. It's actually can be quite complicated, even using ETFs. You get all those benefits, but it's not just simple, I'll pick this or that, right? So there's good and bad. There's so many choices out there. So, yeah.
Okay, that kind of lays out, I guess, the pros of each option as we see it. And I'm sure there's others that for certain people are more, unique. But I think very high level, those are the two options. Let's ask the very important question. What percentage of people watching this video, investors out there, should be stocks, should be ETFs?
Right.
Because again, one thing we're very cognizant of is, like, we are both individual stock portfolios. We have this channel, 200,000 subscribers. We don't want to be influencing people to be doing what's not the right choice for them. And that's why we always try to lay everything out. And this is the question, I think. What percentage of the people watching should be ETFs versus stocks? I'm
not going to give you a number, but I'm going to say I think more people should be using ETFs than individual stocks.
Yeah.
If you're going to go all in on either strategy. I'm an advocate for combination of the strategies, but certainly if you're going to go all individual securities or just ETFs, I would have to say for most people, ETFs would be the correct route.
And that's what I promote too as well, is that the ETFs first. And there's many factors that one would consider. In fact, maybe prior to getting into these factors, Dad, I'll just share with you guys why, what this predicament that I'm in. Because I do find it very fascinating. It's interesting. I never actually foresaw this in my life, being in individual stocks for so long. But long story short, I've been, I guess, just looking at my life and how things have changed.
What's changed?
A couple things here and there, but yeah, I'm 29 now, and I've been investing, since I was 10 or 11.
Yeah.
So I've been in the markets for close to 20 years.
And I know people are going to say, hey, you can't buy stocks when you're 10 or 11, but yeah, you, as the father, I set up interest accounts for you and your brother, and so you could actually buy them. And
for those that don't know this story, exactly. So I've been owning individual stocks like McDonald's and Coke for many, many years, ETFs, mutual funds over the years. Yeah. Since I was actively being involved more, in investing, working for you, I've always enjoyed that individual stock route. I never saw it any other way. But, as life has kind of just hit me further and, work and then family and obviously the Ava's growing up.
Yeah.
The time just gets stretched pretty thin these days.
Yeah.
Yeah. Which is crazy. And it's I think about when I was working at the firm with you, and all day long I had the time and interest and desire to just literally follow the stocks that I owned. And it's you see the contrast now when you are, let's say more busy, how much time that required to manage even just, let's say, the 20 stocks in your portfolio. But realistically, we monitored more stocks than just our portfolio holdings.
Sure.
I mean, when I was working with you, I had to do detailed reports, every earnings, we had our weekly meetings, and it was quite. Again, that was normal for me.
That was our role.
That was the role when we were working professionally, and you still, obviously, this is what you did for your career. I think a lot of maybe viewers don't understand that level of commitment and time required to manage a portfolio of individual stocks.
Well, when I think back to my career, one of the greatest values I brought to my clientele was they were busy doing things.
Right.
Some of them didn't, they didn't want to do an annual review with me. It's just run with it. And so to me, they could go ahead with their lives, whether it's raising children or building businesses or just working and whatever they wanted to do. That was my job to do that, right?
Yeah.
And I would say for a lot of people, I don't think you can effectively manage a big security realistic and still run a normal life. Your life has changed with, you're involved in 2 businesses. That takes up a lot of time. You have a 2-year-old child that you're a very hands-on dad, so that takes up a lot of your time. All those types of things. So yeah,
all types of things.
Yeah.
But it's it's interesting because dog. But it's like I don't know why I feel bad about doing this, but I don't feel bad about it when I think about it. It's essentially taking like a reflection of where I am in life, and I think the way I always considered DIY investing, the power why it's such a special field is that it's so personalized and so unique.
Yeah.
And you have all these options and strategies and approaches, and in my opinion, the best DIY investors, they don't just see something out there. They really do a self-reflection and say, well, what is the best route for me?
Yeah.
And it's really it boggles my mind to think there's such a difference 5 years ago, in the past to today. It is very different, and I just look at myself and it's like I haven't had the time to monitor every single stock in my portfolio. One thing I will say is that I very strategically pick stocks that I do kind of view as like more or less forever stocks.
Right, yeah.
Stocks where you don't have to be, let's say, every earnings call, like looking at them.
Yeah.
Those types of companies.
Yeah.
So that does give me a little favor there. But just in general, I'm very much in that consideration phase where it's like, does going to an ETF approach just suit my lifestyle better?
Well, and I'm a huge advocate of investment policy statements, IPS. So I think everybody, when you start on that journey, you write all these things down: lifestyle choices, portfolio management, how much time are you going to put into it?
Yeah.
And this is, for the stage of life that you're in right now, it may make more sense to outsource some of that portfolio management to the others.
Yeah. And I'm curious. I mean, that's really like I said, there was no definitive decision. This is just an idea that's been creeping into my head, and I wanted to share that live with you guys and hear your thoughts on that.
Yeah.
And just genuinely hear maybe from the audience, like, has anyone gone through this? Do you have any thoughts to share? It almost feels like a cop out, which I know is not the right way. Like, I'm just thinking, naturally it doesn't. It's like, going back to ETFs, but actually not at all. The more and more I think about it, because again, for all the pros and cons we talked about today, you're essentially guaranteeing yourself a nice steady return over the years.
And I touched on this earlier because I don't believe if you made the switch, if you made a switch to ETFs, I don't think you're ever going to say I own no stocks. You will keep some of your favorites in there, right? That's
so true. You gotta keep Alibaba and Tencent.
Yeah, you gotta keep Alibaba and Tencent till you make that money back.
But that's exactly it. I mean, realistically, and this is something, I mean, certainly on the channel, I will keep you guys posted if a change like this goes through, because this is a massive change. But maybe for a good portion or bulk of the portfolio, this could be a consideration. And I think it's just, I do think this is a valuable topic to discuss. And I hope in the comments, people are willing to share what their experience is, because I see it time and time again where people are like, I've made the decision to switch. Right.
Well, and I know people labor over the decision. It's a tough one because some people, like, I know there are people who feel, if you're really an expert, you don't use ETFs, you do it yourself.
Experience
level. And that's just dumb to say that because that's factoring in one little slice of the bigger picture, right? Mm-hmm. And for everybody who's watching this video, you have your own circumstances, right? Your life today is so different than it was 5 years ago. Right, so it makes a lot of sense.
And I know even for a fact, you in your professional circle, you have professionals that sometimes will opt for. I mean, I know we've built portfolios back at Beavis Wealth, Beavis Wealth, like not the YouTube channel, but
the business,
the firm. Business, certain cases, ETFs are the right approach, right?
Correct.
So it's not that ETFs are a.
Well, and for example, you may have clients who are afraid, even with professional guidance, to own shares of TD Bank, for example. So ETFs gives a comfort level there. So there isn't a right or wrong, and it's kind of tough when people are stressed about this decision. But I kind of get it. It's
I'm not stressed about it personally, but it's just something that's funny, and it is a funny conversation because it does get polarizing. Like many topics, in investing, it gets very polarizing very quick.
So it will be interesting because this is the first time Brandon and his family are up visiting for a little while. I'm going to be grandpa for a week.
Babysitter for the week.
Babysitter for a week, so that's kind of cool.
Come here, drop the baby off, and get out.
Yeah, nice, eh? Well, we'll see when you guys come back in. I guess a week, you'll be back, right? You'll see if you ever let me have your baby for a whole week again. But I'm looking forward to that.
I'm sure we will.
But it'll be interesting as you go through this process here, and
curious to hear your thoughts.
Yeah,
I think so. Yeah. Because like I said, nothing's been formed. It's just the seed has been planted in my head. And
what do you think Brandon should do? Knowing if you're a regular viewer of the channel and you've watched for the last 6 years or so, given all of Brandon's sharing with you, should he go with ETFs? Should he do a hybrid, or should he stay with individual security? That would be an interesting.
I would love to see
a little mini poll kind of thing. So
I like that.
All right.
Well, hey, I think we'll wrap it up there.
Yeah.
Obviously, nice to see you, Dad, and good to be here.
Yeah, good to be here
in person.
Yeah.
And I got a ferry to go catch here pretty soon.
You do, yeah.
It's bright and early, so yeah.
Yeah, you got to go in there. Jump on the boat. Okay.
Jump on the boat, yeah.
Thank you, everybody, for watching to this point. This is so nice to get this chance to do an in-person video, have a little topic like this. So
no, it doesn't happen all too often, but leave a thumbs up if you enjoyed. Let us know. And our events, we should be seeing you guys in a couple weeks, to be honest.
Toronto, New York, Montreal, Calgary, Vancouver.
Yeah, tickets are probably going to sell out very soon here. Yeah. And it was just incredible to see everyone, and we're going to be there, so yeah.
Yeah, sounds good. All right, thank you, everybody, for watching. See you in the next video.